USD CAD fell for a sixth session as US dollar weakness met cooler Canadian inflation. The pair moved because both sides of the trade changed at once. The greenback softened while Canadian policy expectations reset. USD CAD Plummets centers on a sixth session, USD CAD drop driven by broad US dollar weakness and Canadian CPI data below forecasts. The first thing to separate is the trigger from the consequence, because the same event can affect users, traders, companies, or regulators in different ways. In this case, the pressure is specific. For crypto traders, dollar weakness is the relevant bridge because DXY moves can affect liquidity conditions across risk assets. That gives the story a clear reason to watch without turning it into a prediction. The anchor is not a mood shift. It is USD CAD extended its losing streak for a sixth consecutive session on March 12, 2025. The confirmed details are concrete. USD CAD extended its losing streak for a sixth consecutive session on March 12, 2025. Canadian headline CPI rose 2.1% year-over-year against a 2.4% forecast. Core CPI-trim came in at 2.3%, while core CPI-median was 2.2%. Those pieces matter together because one fact shows the event, another shows the context, and another shows why the market or user reaction was not random. A broad crypto audience does not need heavy jargon here. It needs to know which actor changed behavior and which part of the system now carries more pressure. The mechanism is straightforward. Lower inflation can reduce pressure on the Bank of Canada, but the pair still fell because the US dollar was under broader selling pressure. The pair broke below the 50-day and 100-day simple moving averages. In plain English, the mechanism is the path between the headline and the real-world effect. If that path is weak, the story fades quickly. If that path is strong, the event can influence liquidity, access, trust, compliance, custody, or infrastructure beyond the first reaction. Timing also matters here because Canadian headline CPI rose too. That context can make the same development more sensitive than it would be in a quiet market. The affected group is not the same in every story. For crypto traders, dollar weakness is the relevant bridge because DXY moves can affect liquidity conditions across risk assets. The 1.32 area became the next major support zone for technical traders. This is why the strongest reading depends on the exact channel of pressure. For some stories, that channel is exchange access. For others, it is a balance sheet, a court filing, a wallet movement, a bridge, a vault, or a central bank signal. Here, the important channel is tied directly to a six-session USD CAD drop driven by broad US dollar weakness and Canadian CPI data below forecasts. The unresolved part is narrow but important. The open question is whether the move is a short-term dollar correction or a deeper shift in North American rate expectations. USD CAD plummets should not be treated as proof of the final outcome until the missing piece becomes visible in public behavior, filings, product terms, wallet movement, or market data. That distinction protects viewers from reading too much into one move, while still respecting the fact that the move can have real consequences. The next observable signal is Bank of Canada guidance, Fed messaging, and whether USD CAD holds or breaks the 1.32 zone. The practical close is to track the observable signal that matches this exact story. If the signal appears, the event can move from initial reaction into a clearer market or user consequence. If it does not appear, the story may remain limited to positioning, operational changes, legal pressure, or short-term sentiment. If USD CAD plummets keeps developing, that signal will show whether the event becomes a lasting shift or a short-lived market reaction.